My name is Linda, and I'm from the International Finance Corporation. We are a multilateral institution, the largest multilateral DFI internationally. We are present in about 180 countries throughout the world in emerging markets, and we are present in 18 countries in Africa, including 3 major hubs, the hubs being South Africa, Dakar, and Kenya. Essentially, we've seen quite a huge growth in IFC's business over the last few years. We've come from a situation where we were investing about $140 million a year in the early 90s to a situation where we now actually are investing about $2.5 billion. We committed $2.5 billion in new projects last year for Africa alone. So this is quite a huge growth for IFC and in Africa. And it really is it demonstrates IFC's strong focus and intention to actually grow its business in Africa. We have, in terms of infrastructure, I have to just clarify that the $3.5 billion is really covering not just a core infrastructure, but it actually includes mining and natural resources, as well as your traditional infrastructure, so your fixed infrastructure, such as airports, ports, as well as power. So in terms of core infrastructure into which power is a part, we're looking at about investing $500 million, perhaps even more. We've seen quite a huge growth in our power portfolio. In the past, we were probably investing in one IPP every year or every 2 years in Africa. There are presently, I think, about 8 or 9 IPPs throughout Africa that are throughout sub-Saharan Africa, and we've participated probably in about 6 or 7 of those. So we have sort of strongly followed the IPP sector. We have also worked quite hard to develop and help develop that sector. Last year we financed close to 5 IPPs. We've closed close to 5 IPPs. This year we actually have a very strong pipeline, and as I said earlier on, I can't really go into the details, but just to give you a flavor in terms of which countries we're actually looking at, we have an IPP in Cameroon at the moment. We're also working on, this is your traditional stock feed, which is heavy fuel oil. We also have in Guinea, which we're working in partnership with our mining team. So this is really more power that is focused on providing energy to a mining company. We've also financed a utility in Kenya, and no prizes for guessing which one that is. And we also looked at 3 IPPs in Kenya currently, which is actually quite a significant development in the country. And we've seen also a graduation from where there was very strong government guarantees in the IPPs to looking to external parties for the sort of guarantees. I think Olvi mentioned some of that. We've seen MIGA actually playing a very active role, as well as the World Bank playing a very active role in those IPPs. So it's been a close collaboration between IFC, the World Bank, and MIGA. We are also looking at 2 IPPs in the Ivory Coast and Cote d'Ivoire, and this is actually was actually a result of a very early on decision by the institution to focus on post-conflict countries. Obviously, Cote d'Ivoire has just recently come out of sort of civil strife, and we have taken the view that we want to strongly engage in that country. So really, right now, we're looking at about 6 or 7 projects that are going through the various approval processes internally, and we are very confident that we will actually close all of those projects, which will contribute significantly to the $3.5 billion investment target that we're looking at. In terms of what can actually facilitate the development of IPPs in Africa, I think everybody has spoken really more about project-specific issues such as tariffs and so on. I just want to sort of look at a more macro approach, and this is really the way where we have faced hardships and where we have actually seen projects completely fall apart is really because the landscape has not been ready for IPPs. So we've seen situations where the legal framework does not exist. And this really is not only specific to power, but it's actually specific to any private project that you look at. So where the legal framework in a country is non-existent or is questionable, you actually find that investors tend to shy away from that. So what we've done is we've actually, in a lot of countries, we've actually worked upfront. We've engaged with the World Bank, we've engaged with other institutions where we've mobilized donor financing and actually worked with the countries, with the governments to work on the legal framework to make sure that the court system actually works properly. If you have disputes, there are proper processes and procedures that an investor can follow, because the last thing that an investor wants is that if they have a dispute that the courts will not listen to them, or they know that going to the court is actually a complete waste of time. The other main issue that we've also worked with several countries on is the regulatory environment. So basically, if you're going to invite the private sector to participate, the government has to have the capacity to allow such participation. So one is looking at, is the legislation, is the constitution, the various regulatory framework, do they actually allow private sector to participate? We've seen a lot of African countries where the governments own a lot of the utilities, the government owns the generation, the distribution network. So in such situations, how do you actually get the private sector to participate legally? And this has actually been quite a lot of work that we have done leaning quite a lot on the efforts of the World Bank. We also, in terms of actually looking at the regulatory framework, we've also tried to ensure that there is competition, because obviously you want to make sure that when you invest in a country, that it will open up for other participants to come in. This obviously is important to make sure that your tariffs are set in a transparent manner. You actually need a regulator who is independent, who is open and transparent, so that the tariff setting mechanism is not hindered in any way. I think we've seen a lot of cases where there's been a cap on tariffs in some countries, or there's been a price freeze where you actually can't increase your tariffs. These are all issues that actually hurt projects. So if you have a robust regulatory system that actually enables market factors to determine issues such as tariffs, that allow competitors to come in, that allow open bidding processes, then this will actually help develop the markets. The final point that I wanted to highlight in terms of promoting private participation in power projects is contractual arrangements. Obviously, one has to make sure that there is the proper allocation of risk in the project. So the government has to take the risks that it can control, and the private sector obviously has to also take the risks that they can control. So basically, you're looking at the private sector taking the risk of the construction risk, for example, the actual production risk, and the government's taking the risks such as political risks. So really making sure that the whole contractual framework is set up in a manner that enables everybody to efficiently and adequately manage the risks that pertain to the project. We really do place a lot of emphasis on the quality of the sponsor in all of our projects, and we're not really partial to the origin of that sponsor, as long as they have the relevant experience. So in instances where a project is actually being spearheaded by a local entrepreneur or a local group, we don't have a problem supporting it, as long as they can demonstrate that they have the capability of actually running the project. To the extent that they don't actually have the capability in-house, we support some sort of structure where they invite parties that are capable. So maybe through JVs, as already mentioned, or through introducing strategic equity partners. We've also seen situations where EPC contractors, for example, can actually take an equity stake and help drive a project. So we're very open to structuring projects, to accepting projects that actually accommodate local participation, but we won't actually do that at the expense of actually making sure that the project has got the relevant capacity. And more recently, in government sort of promoted projects, we've seen a specification for a certain percentage being locally owned, and we're fully supportive of that as well. That's another way of introducing local capacity. InfraVentures, just for some of you that don't know what it's about, is an arm of the IFC infrastructure that looks at early stage projects. So basically, in situations where you have a good idea, a very good concept, and a project that is that it's fairly developed, but still needs a lot more work to bring it to bankability. We actually get involved as a developer by providing finance. But this is not limited to local parties only. Again, because we are not, we actually don't have the capacity to develop projects. We actually are really more of a financial institution. We again look for parties that have the capacity to come in and work with the local sponsors who may have started the project.
Doing business in Africa, you can't afford to be without Africa Investor.